I passed my challenge. I think I'll verify, but I passed my challenge the first week. What are inefficiencies? Fair value gap. Fair value gap is the main inefficiency of the market, right? No, price don't move further than inefficiencies and liquidity. That's basically how the market moves. The market moves between PDRA looking for inefficiencies and liquidity. Liquidity as in, this is one theory I like to use. I like to say a fair value gap does not necessarily mean that when price comes into it, all right, it should bounce price off. Psychologically, what does a fair value gap actually tell you? A fair value gap indicates that a market is healthy. A fair value gap indicates an order flow leg. It tells you there's momentum in this market. All right. It tells you also that there's a reason for price to now retrace, because if price is buying, if price is in a bullish market, yes, all candles should seek the high of the previous candles. Engage on this trade immediately without waiting for a confirmation, because my confirmation, when I'm not taking a direct entry on the daily time frame here, I'm taking the next fair value gap that is being created on the 4-hour time frame. I'm measuring that out, slapping a Fibonacci on it, and I'm taking the 70.40% on a limit order. Clean. Happy New Year, guys, and welcome to another video on my YouTube channel. Mano FX Live wins again. This is going to be the first video of the year 2026, and I'm happy to inform us that I was doing a series last year on my channel where I spoke about trying to pass a $10,000 account. So I'm happy to tell us that I've passed that, phase 1 and phase 2. Unfortunately, I was inconsistent with putting out my trades on here. That is my wins, my losses and all that. That was because I went into a period of drawdown for quite a short period of time, and that actually, I really had to pause on video creation and really focus on what I really needed to focus on in the market. As a matter of fact, I did not go on break, alright? I traded a day to, I think, as early as January 3rd, as early as January 2nd or 3rd, I was trading again. And a day before Christmas, that is December 24 or 23, I was trading. And when the markets were open after Christmas, I was trading. So I didn't go on break, alright? So I don't go on break in this market. I don't believe the festivities and all of the Christmas, New Year and all the celebrations could hold me back. And so yeah, I passed my challenge. I think I'll verify, but I passed my challenge the first week of I think the first week of January. The first week of January, yes, passed my challenge the first week of January, and that was phase 1, if I'm not mistaken. And then before the ending of January, that's I think last week, yes, last week on Monday, yes, on Monday I passed phase 2, and that has been that. It's been lovely, took a lot of hits, a lot of losses. I kept my losses small and kept my wins really big, because I'll be sharing some of the trades that actually helped me get out of drawdown and pass the challenges. It was lovely. I cannot start to explain how I felt when I passed phase 2. I've been passing challenges, but there was this feeling that came with passing this particular account, because like I said in one of my Twitter accounts, I mentioned that I passed the $5,000 account, but I wasn't given the login to my funded account because of an email error. All right, that's going to be another explanation for another day. But Funded Pips, which is the company I'm trading with, refused to give me another account on the actual email that the account should be on, and they refused to rectify the situation. So I passed phase 1 of a $5,000 account, I passed phase 2, but I was not given the funded stage. So very quickly, let's go into the video. EURUSD broke my heart last week. I'm going to start with that. I don't know how I missed the buys on EURUSD. Maybe because I caught a sell on US30, and I don't know how that made me start seeing sales on EURUSD. Actually, I'm bullish on EURUSD. Yes, I'm bullish on EURUSD, but somehow when my setup was there, I just missed it. All right. By the time I realized, yo, this is your stuff, man, I was already focusing on other things, and so I just let EURUSD go. I wasn't able to capitalize on the move, as we can see here. Yes, I was supposed to get on this buy right here, on EURUSD, but god damn it, I don't know how. That's about 142 pips and 1 to 8 weeks to roll, but it's fine. You know, another train is going to come by. I'm going to hop on that one, and I missed that. I did not even enter at all. I didn't enter. Rather, I was looking at a sell here, I believe, a sell here, which I took a loss on, but it's fine. And then I was supposed to use this Fibonacci, but like I said, I was focused on other pairs, on other things, and this didn't really give me the 70.40%. The blue line didn't give me that line, so I let that go. But now, moving into the future, which is now in 2026, what would I be looking at on these pairs? Starting with EURUSD, I want to be really quick with this so that I can share these insights, put it out here, and I want to take a deliberate action, or a deliberate decision rather, to be really consistent this year, with updating my trades, my thought processes, everything I'm doing basically, and so help me God. So let's go into the video. Starting with EURUSD. All right, what am I looking at? I've already analyzed EURUSD, but I want to start over again so that we have a broad view of where I'm coming from. All right, so very quickly, I start from the monthly time frame because it's a new year, yeah, and it's a new year, and well, new price action, new momentum, everything new. So what do we see here? I was able to detect that January had swept December's lows, all right, and I indicated it with this broken line over here, and that was what caused the reversal. That is a bullish argument. All right, we have the sweep of swing lows, which is swing high or swing lows, and tap into PD arrays with like fair value gaps, order block, inverse fair value gap. These are arguments that supports your claims or your bias. So I haven't seen that EURUSD did that. All right, if you drop down to the weekly time frame and look at that destruction by just 1 week, by just one weekly candle. Look at all that. I also want to add that this right here, this fair value gap, very fair value gap, was the fair value gap that tried to convince me that EURUSD was a bearish market or would continue bearish, but that was actually resistance in the way, and quickly I was able to spot that and change my decisions, change my bias. But by the time I had gotten hold of it, EURUSD was not waiting behind at all. And so with that bearish argument taken out of the way, what do I want to see this week? This week I already have my levels marked out on EURUSD. I am positioned for a buy. I have a certain type of conviction that it should continue buying from that area. So now, what do we see here? The buy that I missed. Let me quickly do a quick analysis on it. So we see the daily, after the monthly had swept the previous month's low right here, all right, we see the daily create a bullish fair value gap. This right here was the indication that price is now ready to resume bullish, like a sharp turn entry. We see a bearish fair value gap going down, 1 2 3 three candle formation here, and we see the bullish fair value gap going up, 1 2 3, and then this is a bullish argument. This alone should tell me, okay, I think price is now ready to continue bullish. But I still wasn't having that, because somewhere around here price was rejecting off of a weekly bearish fair value gap, which is a bearish argument. All right, so and it is higher than the daily, so I had reasons to feel, okay, if this weekly fair value gap holds, we could see EURUSD start to plunge. All right, it could start to sell off, and the daily fair value gap we have over there might just fail. But then that didn't happen, and then we got to see that a bullish fair value gap was created here. So what did the price do? This is Friday's candle, and this is Thursday's candle. On Wednesday, the third candle was created of the fair value gap. All right, so what do I like to do? I like to draw my Fibonacci, right, either from the key range or from the full range, depending on the scenario, depending on what the first candle is. All right, in this scenario, I'll be drawing my Fibonacci from the key range, not because price has already played out, but because in a situation where you have a fair value gap below and a fair value gap above, usually the first fair value gap is supposed to hold. The first fair value gap is supposed to, hold price up. But in a situation where that fails, then we can then look to measure out the second fair value gap. So what did I do? I used the key range. And also in a situation where the first candle of your 3 candle formation in a fair value gap is not a rejection candle. When price rejects, it means it has gotten to a certain point and then reversed very quickly to then leave a wick in the higher time frame. Yes, so now when you go into, let me say for instance, you have a very long wick on the daily time frame. When you go into the 15 minutes time frame, or the 5 minutes time frame, the 1 hour time frame, you are very likely to see, in a bullish scenario here, fair value gaps going down, and immediately fair value gaps going up. Yeah, so a wick tells me that there is definitely going to be, or at least there's supposed to be, inefficiencies in the lower time frame. So when my first candle in the 3 candle formation of a fair value gap, when the first candle is not a rejection candle, which means it doesn't have a long wick, all right, I tend to take the middle candle, which is the second candle, to the high of the third candle as my measurement on the Fibonacci, and this Fibonacci will give me sensitive areas where price is likely to reverse back into and then continue in its direction. So I continue. In this case of EURUSD, right, we see this first fair value gap on the daily, and then we see the second fair value gap on the daily. All right, this is 1 2. I'm expecting this to hold and hold very quickly. All right, so when I draw out my Fibonacci from the key range, which is the middle candle, to the third candle, this is the third candle, right? But the middle candle high is higher than the third candle's high, so I'm using the middle candle entirely as my Fibonacci. And what do we say right there? You can't make this up, guys. If you check my other videos, right, it's there. This is a very sensitive level, the 0.704, which is 70.40. If I change this to percentage, all right, when I change the style from values to percentages, right, percent rather, you see this is 70.40%. all right, so very quickly we see that this is a very sensitive area, the 61.80, 70.40 and 79% level, very sensitive, right? So now if you drop down to the 4-hour time frame on EURUSD, yeah, what do you see right here? It was a clean tap, but check out the time, 11 p.m. of my time, of Nigerian time. This is not a trading hour, so I don't blame myself much for missing the trade, because I wouldn't have been positioned in it anyway. Like, the hour was just weird and odd, so that entry wasn't for me. Where I really did mess up was not catching or following up on this fair value gap right here. So moving on, we see a tap on the 70.40% level and an immediate reversal. Price didn't even bother going lower. So now from the daily time frame here, if I was to engage on this trade immediately without waiting for a confirmation, because my confirmation, when I'm not taking a direct entry on the daily time frame here, I'm taking the next fair value gap that is being created on the 4-hour time frame. I'm measuring that out, slapping the Fibonacci on it, and I'm taking the 70.40% on a limit order, clean. Like, that is what I need to wait for. That's the time frame correlation, time frame relativity. Daily should be related to the 1 hour, but for an extra confirmation, I use the 4 hour as something that is stronger than the 1 hour, right? To filter out the noise and whatnot. So now, on the 4 hour, if I was going to enter direct, this was how I would approach this market, this buy, all right? I mark out my 70.40% level and the 79% level. The box actually covers them all. But then, how would I have known the perfect entry? How would I have been able to figure out where I'll be placing my limits, all right? It would be from following the fair value gaps down the time frame, right? This is one theory I like to use. I like to say a fair value gap does not necessarily mean that when price comes into it, all right, it should bounce price off. All right, that is not the first thing the fair value gap tells you. That's not the first thing. Actually, fair value gap should hold, yes, because that's what my strategy is based around. But psychologically, what does a fair value gap actually tell you? A fair value gap indicates that a market is healthy. A fair value gap indicates an order flow leg. It tells you there's momentum in this market. All right. It tells you also that there's a reason for price to now retrace, because if price is buying, if price is in a bullish market, yes, all candles should seek the high of the previous candles. Every candle should keep on seeking the highs of the previous candles, keep on seeking the highs of the previous candles, until there's a reason to now retrace. Now, what are the reasons that price retrace for? Price retrace after hitting an opposing PDRE and then falls back down in a bullish scenario, retraces back into a bullish PDRE to then continue in its direction. What could an opposing PDRE be? An opposing PDRE could be a swing high, or an unmitigated order block, or an untapped fair value gap in the bearish side, a bearish argument. When price tap into these arguments or these PDREs, what does price do? Price falls into the bullish PDRE or the bullish fair value gap to then continue. So a fair value gap is an excuse for price to retrace, in my opinion. Now, it is in this retracement that we now want to find out if this fair value gap is actually correct enough or strong enough to serve as a base or as a support for price to continue in its direction, in its trend. So every time I see a fair value gap being created on the daily time frame, I want to stop what I'm doing on the 4-hour time frame. I want to stop what I'm doing on the 1-hour time frame. I want to stop what I'm doing on the 30 minutes time frame. I am not looking for new entries. I am waiting to see if price now retraces back into the fair value gap and then provides us signatures, new reasons for us to continue buying. So now, in this case, after price has created this daily fair value gap, all right, we see very clean that there is a 4-hour bullish fair value gap right here. But when I walk my way down the time frames, like I said, the fair value gap is a reason for price to, retrace. And if there's a reason for it to retrace lower, which is when there are more fair value gaps on the lower time frames that pile up into creating these higher time frame fair value gaps, then price will definitely retrace deeper. This is how I get my sniper entries. This is how I get my, my really quick tap and reverse kind of trades. Alright, so I go down to the 1-hour time frame, and what do I see over here? I see this. Normally I like to stop at the 1-hour time frame, but if there are reasons for me to go lower on the 30 minutes or the 15 minutes, then I want to go lower. Alright, I also use the psychology of, if I'm going to lose, I want to lose last. Alright, the other traders would have actually hopped on this buy in different legs, probably up here, down here, different places, yes. But if I'm going to lose, I want to lose last. So a little bit of refinement is not going to hurt. A little bit of refinement is not going to do me any harm. And if I miss a trade, I'm fine with it. All right. So I was going to take this fair value gap from the opening of the fair value gap to the third candle. That is how I structure my entry. Right. I don't do all the way draw all your stop loss to the 100%. You now have one kind of 50 pip stop loss. I don't do that, because my idea of entry is that when price taps into a sensitive area, it wants to reverse in the next few candles. Like, it wants to quickly reverse. It doesn't want to be playing around in your entry. Yeah, price, you don't want to see price playing around in your entry. Price wants to quickly reverse. So that quick reversal should happen in the next 10, 12 to 15 pips on Euro USD, GBP USD, and the rest. Worst case scenario, 20, 25. If you are going to really swing that trade, if you're expecting higher prices, more runs, then you want to use higher or a bigger stop loss to protect yourself. But my idea is I'm entering in sensitive areas, and this area should look to reverse price very, very quickly. So what do I see here? I see that there is a 1 hour fair value gap that is untapped, unmitigated, right? And it aligns, the opening aligns with the 61.80% level. That's fair. Then what I do, I drop down to the 30 minutes to see if there is any correlation. And right over here, there is another unmitigated fair value gap on the 30 minutes. Let us check it out real quickly. Very, very, very clean, unmitigated on the 30 minutes. Yeah, it's unmitigated. This is it. So what I do, I could take my entry over here and then put my stop loss on the third candle. If that's correct, I want to see price tap into it and reverse very quickly. If it starts to go lower, then I'm probably wrong, and that's fine. When I drop down to the 15 minutes time frame again, and then what do I see? Voila. And that's really, really aligns as well. You see, there is a fair value area over here of this break. I don't want to talk much about that, so let me just move on. The perfect entry right here, the perfect entry was this fair value gap on the 15 minutes, which aligned with what the 30 minutes was saying, which in overall also aligned with the 70.40% level of that daily Fibonacci that we measured out. Alright, so why am I doing this? Even if I miss the trade, I want you to be able to see a system that you'll be able to replicate when it shows up in other pairs. This actually works on every pair, on anything you can think about. You just need to know how to spot the right Fibonacci, the right fair value gap, correlate it with the right time frame to look for a signature. Then you slap a Fibonacci on it, you get the right levels to trade off of. Let me tell you something very quickly. It's like this. When you get, especially on the weekly or on the daily, when you get an argument happening, or let me say, I'll call it an argument. When you have a bullish argument, let me use the buy scenario, a bullish argument happening in the sense of a swing low sweep, or you tap into an unmitigated fair value gap or other block. You want to see price from that tap. All right, that's an argument already. You want to see price from that tap on a time frame lower than it, or on that same time frame. Immediately go on to create fair value gaps. All right, don't stress yourself looking for, okay, how can it has swept this low now, how can I engage? No, wait, the market could be reversing for all we know of. All right, so we want to quickly see how price reacts from tapping into those levels on the daily time frame. What do we see here? We saw that on Euro USD, it was a monthly low sweep. That's a swing low sweep. All right, it was a swing low sweep, and bro, this is very heartbreaking. That who knows? This week could just plunge, because now it's sweeping. This is another bearish argument, but we are more closer to this high over here as a new draw. We're more closer to this high than we are back to this low. So I'm expecting EURUSD to keep pushing. Alright, so I'm expecting EURUSD to keep pushing. We are much closer to this high than to this low. So yeah, we could continue seeing buys. Wow, and this week is third candle week. This week is gonna be very dangerous. This week is gonna be very dangerous because that's another concept that I'll explain in another video. This week being third candle, price could do one of three things. Price could buy, price could sell, or price could consolidate. And that is that's three probabilities, and that's very low probability. But I'm expecting buys, right? You can either want to sit out on trading this week, or you pick a side, and I'm picking the buy side on EURUSD. Right? So in this video, I'll be touching only EURUSD because I don't want it to be too long. I just want to provide these insights. When you hear me speak a lot, when you hear me talk, you will be able to understand what I'm talking about and how to follow through. So only EURUSD in this video. So like I was saying, we move back to the daily to continue the explanation. So now we see that price tapped into this, I've explained, and on the 4-hour time frame it's correlated. Let me take out the Fibonacci. It's correlated on the 4-hour time frame, which I then dropped down to the 1-hour time frame, gave me a fair value gap, and it continued above. And then what did the price do? The price created new fair value gaps to the upside. How many fair value gaps do we have going on right here? We have one, and we have two. Simple. 1 and 2. So what did the price do? 1, 2, 3. The first candle over here, which is this candle right here, is not a rejection. Rather, it has its own fair value gap. So it is either this fair value gap holds it up in the first two candles that tapped into it, because there is something I use also, 2 candle rejection. I got that from watching RJ videos. He's a very good teacher, and he's somebody I hold dearly. He actually gave me the clarity that I know now. My use of fair value gaps, my understanding of the market. I've actually been trading for the past 4 years, and it's very, 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 it's very crazy, but I love that I've come to a level of understanding where I'm able to explain what I know, at a stretch in this length. It didn't come from didn't come rosy. All right, it came with a lot of lessons, a lot of pain, a lot of tears, obviously, but I'm glad that we are here now. I am confident enough to talk about these things because I know, yes, it is repeatable, the system is profitable, and yes, it works. All right, I'm this person that I've always waited for the right time. I've always waited to be a master at my craft and all that, but here we are anyway. We started, and it's not too late. I'm glad and I'm thankful. So here we see this 4-hour fair value gap, another 4-hour fair value gap. You'll not be using the first until this first fails before I'll be looking to use the second. So you might ask, okay, what if the fails and you took a buy on it? Cool. Then you test the waters again. You test the second fair value gap. If you're scared of this, you don't want to enter off of this because it is 2 fair value gaps. What you can easily do is let this fair value gap create another fair value gap. Very simple. And that's what price did here. This fair value gap, because you were doubting, okay, should I take this lower one? Should I take this higher one? Let's see which creates another fair value gap. And this right here creates another fair value gap, which is where I'm positioning right now. Alright, which is where I'm interested in positioning right now. So where will I be looking to catch? It could come back, it may not, alright? But if it does comes back, this is where I'll be positioning from. We see the first candle is kind of like this is an inverse pin bar. It's supposed to be a hammerhead, but I think it's inverse. I didn't read much on these candlesticks because Those were very early on in my days, but I call this an inverse spin bar. Alright, so what do we have here? We have this big bullish candle, and I'll be measuring it from the middle candle as well, because that's not necessarily a rejection of the bullish side. So what I see now, this is a breakaway gap, but recently I've stopped using breakaway gaps unless they show up on the weekly time frame or on the daily time frame. So now this is a breakaway gap, but I'm interested in this fair value gap first before any other thing. So we have this fair value gap looking at us on the 4-hour time frame, and when we drop down to the 1-hour time frame, we follow through. What do we see? You see the 1 hour has something unmitigated right here, an unmitigated fair value gap on the 1 hour time frame. Yes, when we drop down to the 30 minutes time frame and we follow through, it is also unmitigated on the 30 minutes time frame, but a little bit of refinement would not hurt a man, would it? Okay, now when we drop down to the 15 minutes time frame, what do we see over here? We see clean, an unmitigated order block, an untapped fair value area, and an open fair value gap. Alright, on the 15 minutes time frame. So if price is interested in buying, you should consider using this place as a base to continue. And then this is also some sort of sweep, some sort of low sweep that I believe could potentially cause price to reverse over there. I'm interested in that. When price comes down to sweep, I should see more push or more momentum to the downside, so price kind of like tags me in and reverse very quickly, leaving a long wick or a sniper entry. So yes, this 15 minutes on tapped fair value gap is my entry. It's the signature for my entry. It's also aligned with the 70.40%, and that would basically be my entry. Now what I'm looking at, that's what I'm looking at on EURUSD. Okay, and having said that, there's really nothing much for EURUSD to do. EURUSD mirrors DXY, so we already have an expectation for DXY to go lower without any more confusion, or let me say doubt. I believe DXY should continue lower, so we'll see what happens this week. Like I will always say, me putting out this content or this video is a means of me, journaling my trades, showing my proof of work and concept, so that eventually I have something to show, and I can put myself out there, gain visibility, and help the next generations or other traders that are struggling to gain clarity, to help them see that price don't move further than inefficiencies and liquidity. That's basically how the market moves. The market moves between PDRA, looking for inefficiencies, and liquidity. Liquidity as in swing highs and swing lows. Alright, session liquidity falls inside swing high and swing lows. Alright, double top, double bottom, they are all swing highs and swing lows. And what are inefficiencies? Fair value gap. Fair value gap is the main inefficiency of the market, right? The market has to create a level ground for buyers to interact, for sellers to interact. So when it buys up, it needs to sell back down, to create a fair balance between buyers and sellers. That'll be it for today's video, and I'll catch you guys on the next one. Alright, perfect. Thank you.